Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your metals market update for this Wednesday, the 19th of July, 2017. And we're about 2:20 p.m. Central Daylight Time. Now, a couple of things you cannot forget. Tomorrow, you will wake up and we're going to have the Bank of Japan and we're going to have the European Central Bank announcements. No one is expecting big changes in either. Traders will be all over the ECB, the European Central Bank announcement, looking to see if they give any clue as to what they're going to do come September or the end of the year in terms of maybe ending this particular QE that they're in. I doubt that they'll do it. It's too soon, but you never know. The gold market is looking at all this in a different way too. If you noticed, we're starting to get more talk now about tax reform. And that's because, very simply, the president's lost the battle on this health care. And I saw his news conference today, and I think they're so much better off not keeping the Republicans in town. Let the Democrats own the health bill the way that they want it, and that's it. And that's not a positive or negative, but let's face it. The Republicans don't all want it. I think you'd agree. They couldn't get their 52 votes, and none of the Democrats were voting for it. Let it end where it's at. Let it fail on its own accord. Let them all get together as we voted them in and get us something that we all want. So do not think I'm always pro-Trump. That is not the case at all, and I read some people that say that. In fact, he hasn't gotten anything passed in Congress, and I think you'd agree with me. Of course, under him and under Obama, the stock market hasn't stopped rallying, which is unbelievable. And the gold market's trying to find its legs right now. How's that? So I mentioned tax reform. You know, there's $1 trillion overseas, and they're trying to bring that money back. If they can bring it back with a lower tax rate, the question is what tax rate? At 15%, I believe it's coming home. At 25%, what's being floated again out there by some of the reports, I don't know. I don't know that that's enough to entice all that money to come back. We'll have to wait and see. But the gold's watching that. The gold is watching today. The dollar come up a little, so it's stalled out. You're down 43 points in the euro. And the Japanese yen, it's close to unchanged. It's up 9 ticks. All we want to do is see how that reacts tomorrow, and we'll make some decisions from there. In the gold markets, should you get a further surge, as I told you, on the weekly chart, I'd be looking at this red line, which is the 18-week moving average of closes. I consider that to be a resistance point on the chart. And as I said before, you're probably caught in a trading range of, let's call it 1295 to 1204, and you're at that number halfway on the chart. So that's one of the reasons I'm also looking at that. The other part of the chart that I'm looking at, and I don't have the closes yet, is 12,907 on an area chart of closes up to yesterday's close of 1241.90. And now we'll see if the market can keep moving with that or not. It's in an upthrust, but I really view this area as more important. If you look at it, you broke, you came back up, and then you broke again. So to me, right through here, let's call that near the 1257 level. That's probably the more important area. That's the number I'm looking at right there that I'm pointing at. We've been in this thrust to the upside, and the swing lines have given you higher lows and higher highs. You're having an inside day today, so the line moves down on the swing line, and it's going to decide what it does tomorrow. You can either get it back over 1244.10 and be moving out again, or you can correct further and it can slip down. It would have to get all under 1214 to break the pattern unless you had what's called an outside day down, where you took out yesterday's highs and lows and then closed lower on the day. In terms of where the market's next resistance is on the daily chart, it's at 1251.20, which ties in right with what we're looking at on the weekly chart in terms of a resistance point. Support back at 1231.60, which is $10 from here. That's the 18-day average of closes. You can see how this all fits together on the chart. If you clear that, then the 1260 level becomes your next resistance. So I think you're going to get some action here. The question is what kind, and frankly, the market's waited so long that you're going to be overbought if you advance much more. So that is another part that you have to build into your thinking. A better chart action might be flipping back down here for the longer term and sitting, not taking out 12, 14, bide your time, get the market away from potentially getting overbought if you're a bull. If you're a bear, by the way, let me come back here. There's no pattern set up to be a bear on the daily chart, not one. So we'll take a look at that. The ETF, GLD, higher lows, higher highs, bullish. Here too, if you look at the reading, you're overbought. Any reading over 70, in my opinion, is one leg of being overbought, and you're there. So danger. If you take a look at this chart, the daily bar chart, higher lows, higher highs, bullish, overbought. So we're getting a theme here in the gold market. It's raced itself up here. It doesn't mean it can't go higher. We have all of the charts in a bullish formation at this point, but you're knocked on the door, and in 2 of the 3, you're already in overbought territory. In the gold-silver ratio, silver is gaining on gold, and again, it gained again today down to 76.26, so it's dropping back a bit. When we go to the silver, you see that. You're having an up day here, higher lows, higher highs, not overbought. If the market wants to reach further, well, it could get back up to that 1700 level because it's not an overbought condition. In the copper, you're failing right where you should fail. I mean, this is classic what I teach in my charting course. You're now having an outside day down against the upper Bollinger Band. The only thing that can rescue this market to create a trap for those that think that I'm wrong on this would be taking out today's highs in the next 2 trading sessions because you're having that outside day down. Momentum-wise, you are very overbought into the upper Bollinger Band. I think the pros, this is where they've liquidated. It's past tense, and they're watching to see what they want to do next. I'd be very careful of the platinum. It got up and just challenged the area of its upper Bollinger Band in an overbought condition, and it too is backing off. Yes, it's in an uptrend, but it needs to correct more. 917.10, while it's support, you're still overbought as can be. Nothing to do there. And the failure in the palladium today, it got quite close. It missed hitting its upper Bollinger Band by 0.6 cents. In other words, 60 cents. It got up at 866.65 an ounce. The Bollinger top was 867.21. I consider that pretty darn close. And here's your outside day down. So this is the area of the resistance. Could these markets pop forward tomorrow? They could if the banks did something that surprised everybody, but I don't think that's going to be the case. I don't know. I never know what a central banker is going to say, and you never know the surprises they may have in store for us. Here's what I do know. You've got an embedded reading. You've just gotten a bit of a bounce in the dollar index. I think there's willing sellers on rallies in this market just waiting for it at this point in time. And in the stock market, notice how you're up to new all-time highs in most of the indices. Very important. This market keeps saying, Trump can't do this, he can't do that. Something's going on. I mean, it's now, what, a 9-year bull market, and it doesn't end. Everybody says how stretched out it is. Terrific. The metal markets aren't falling anymore on it. Interest rate futures are pretty stable going into whatever's going to happen tomorrow. And we know that our own Fed is sort of stuck right here. Although they did get good numbers today out of the banking sector. We ended today with Morgan Stanley's numbers, and they were good. So all the banks came out with their numbers, not bad. Housing numbers today, very strong. So let's talk about one of the formulas one of my favorites that I watch, and I watch this one all the time. It offers ideas on entry and exit, and for those that like day trading, it's a way to do it. Now, I'm not saying it wins or loses. I'm saying it's been around a long time. I've certainly watched it for decades. And it was taught to me by one of the guys that created this, Larry Williams. And he used it for a long time. And I know Larry going back, God, I probably met Larry in the 80s. So in looking at this and how it works, you should learn it because it's another trading tool. And traders use it, and that's the key. I don't like teaching something other people aren't using. And you'll say, no, I want to use that other thing.
I like to be with the herd. And the reason is that's, when you trade, you want to be with the guys that understand things that stop market at key points and why they're stopping. And that's what I look for. I guess it's different than some of you might think as to how you look at it. But I've seen all the other stuff, and I've come to that conclusion. You can always give us a call. You can go to our website. It's Pivot Points, and it's 2 videos that teach you the theory of this technical trading tool for more in and out trading. That's really what it's about. Or entry points if you're studying where is there an entry point for a position you might want to carry. And you use either 5 or 15-minute time frame charts on it. It's easy. Just about every charting service that's got its merit to it carries this study, but I teach you how to work with it. You can also click up here if you're watching me on YouTube. That'll take you to a form to sign up for it. We'll put it in your hand. Or under us on many websites, it says click here for Ira's free information. We'll do that. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.